Good morning, everyone. I'm Vince Lancy, and this is the morning market rundown. Okay, title tentatively UBS and CITI raise the bar, and JPM likes the miners. Referring, of course, to our main topics today, UBS and Citibank raised their targets on gold, and JP Morgan has embraced miners publicly even. Okay, so let's start with the markets. 10-year yields are 444, up a little bit. The dollar is 107.84, up 14. S&P 500 is 60.85, 60.83, up 13 and change. The VIX is 1530, down 18. Gold is 28.65, a solid $10 higher. Silver 32.23, up 3 or 4 cents, depending on how you look at it. Copper 449, WTI 71.50, natural gas 366, Bitcoin 97,850, Palladium 973, down 9, Platinum 988, up 1 and change, gold, silver 88.80, soy, corn, and wheat 1051, 486, 594, down 8, down 4, down almost a little over 4, and then down almost 5. Okay. Okay, our homepage, bunch of stories. Here are 3 of them. Gold lease rates explode as U.S. repatriation grows. That's our term, repatriation. Others are now using it. We think it's true, and we think there's more news coming out about that, although we don't have any solid information. Founders UBS Gold Update. That's the UBS report we sent out yesterday in full to founders. We're going to discuss that today, and it's already been sent out this morning to premium subscribers. Standard Charter says Bitcoin to 500,000, which kind of hurts me every time I read stuff by Standard Charter, as they were one of the first bullion banks that I followed. But now they seem to be a Bitcoin bank. Things change. I'm a fan of Bitcoin, so I can't cry that much. Breaking UBS raises target to 3,000. That's the post we sent out yesterday. There's plenty more. We'll come to those in a second. Okay, first, non-farm payroll is today. 170,000 non-farm payrolls are expected versus 256 in December. The slowdown is here. Okay, well, I don't know. The data may surprise us again, but the slowdown is projected to be here. And we'll see how the market reacts to that. If it does happen in line, how stocks and bonds and commodities act to that, because now they're all thinking about, well, if the slowdown is here, will Powell ease again? And who knows, right? Goldman thinks, just for the record, Goldman thinks there's definitely another 2-3 cuts coming, and other banks have pulled away from that significantly. So Goldman has stuck to their guns for the most part. All right, UBS. Oh, and the unemployment rate is projected to hold at 4.1%. I read somewhere Zero Hedge noted that more revisions lower are coming. So whatever the numbers were in the past, they're going to be revised even lower. Biden, Trump, whoever. All right, so getting to the titles. UBS, the gold rush continues. We have 4 stories, so we're just going to give you some synopses from a couple of them. UBS, the gold rush continues. Gold, quoting the story, gold reached our long-held forecast of US dollars 28.50 an ounce, and while we acknowledge the current spot price is above our fair value estimate, our house view risk case is edging closer. So we lift our forecasts to US dollar 3,000 an ounce over the next 12 months. We have that. Click continues there. Next, JP Morgan likes miners, especially Fresnillo. We raise our Fresnillo overweight December 26 price target to 10 pounds a share, previously 9, and shift Fres to our top pick among the EMEA gold miners. And given it is trading on around the 3.5 EV to EBITDA, we also stay overweight on Hochschild, I'm not sure how to say that, and Anglo Gold, and see potential for both to re-rate as well. EMEA, if you're not familiar with that terminology, EMEA is Europe, emerging markets, it's basically Europe, Middle East, and Africa, but essentially it's emerging markets. So you're going to see Latin American miners thrown in there as well. Next, so that's two of them. The third one is Peak Suite, which is an aggregator of information, kind of like a Bloomberg for traders. It's streaming. It's a good product. We like it. CITI raises their price target. Now they alerted us to this, and then, well, we'll get to that in a second. They are quoting the report. The gold bull market looks set to continue under Trump 2.0, with trade wars and geopolitical tensions reinforcing the reserve diversification, de-dollarization trend, and supporting EM official sector gold demand. And with global growth concerns, tariff and cycle related, set to raise ETF and OTC investment demand via Peak Suite. You can click on that and see the source. We have this report from CITI and had been holding off on it for a day or two. We wanted to, because it's a very big report. It's a deep dive, right? And it's entitled "Why Gold's Bull Market is Based on Physical Fundamentals and is Set to Continue." And we will be going through it with a fine-tooth comb this weekend for premium subscribers. But Peak Suite broke it, so we have to get it out there. You guys have to know what's going on. And in context, CITI is not very public with their announcements because they are largely a commercial bank. So we're lucky to get this report. And we have another one that we really haven't shared because the tariffs got pulled off the table so quickly, but they handicap the tariffs as being bullish for gold. And although they didn't get into the reason of it, they handicap it as being bullish for gold because there's basically it's a relatively inelastic product that's going to be bought. So they said bullish because the prices at the refined end would trickle through to spot anywhere from 2 to 5% in price, and we may be seeing that right now. But there is a lot more going on in these markets, I think. As Zero Hedge has noted, a majority of the world's free-floating gold that's not encumbered, gold that's not spoken for, gold that's not tied to one particular geographic place, is now in New York. Why? Why? What do we need it for? And we want to go through that in more detail this weekend as well. Specifically, if you're interested, this repatriation concept, although it wasn't called that then, happened during COVID as well. And there were very specific, very real, very legitimate reasons for it to happen. Reasons, narratives, excuses, however you want to call it. But we were definitely on top of that because it made COMEX prices go up relative to London. It made COMEX futures go into backwardation. And there were real reasons for it that were identifiable. COVID, smelters ran down, had to shut down. There was real U.S. demand for coin blanks, although that wasn't advertised, but that was true. And so now, what's the reason? Maybe there's some coin demand. Maybe the government's about to release, a Trump commemorative gold and silver coin. Who knows? But we think that we're moving closer and closer to announcements related to, hey, we want our gold back too. So they're not buying the gold, but we're taking delivery of it. And if we're taking delivery of it, that means it's never going to be in the wild again. Okay, so there's some big stuff going on in gold, although we don't know exactly what it is yet. News and analysis. These are the stories we put out in the last 2 days. Some of the stories. Founders January payrolls preview. You just got a taste of that. We sent that out this morning. UBS, the gold rush continues. That's the full analysis done by them, also gone out this morning. JPM likes EMEA gold miners. That's that story. Breaking UBS raises target to 3,000. That was the alert that we sent to everyone yesterday. Gold lease rates explode as U.S. repatriation and delivery logistics grow. That's the story I wrote yesterday. Founders UBS gold update. And Standard Charter says Bitcoin to 500,000. Be still my beating heart. Michael Every of Rabobank besenting the facts of life. Basically a geopolitical piece. Data on deck, unemployment. You may be seeing that by now. Maybe seeing it as you're watching this. There's the data. It is Friday. We welcome the weekend, although we're going to be writing this weekend. Here's the charts. Kind of busy there, right? All right. Silver is now above the moving averages, right? I keep having to delete these, but I don't erase them permanently. We don't care about moving averages anymore. Gold is, well, I gotta tell you, gold is gold's nearing overbought. Okay. So today's data, this is all buying that has to buy. It may not mean much to you, but what it means is that that's big buying that's been coming into the market looking for moments of liquidity. When it's sold off, it gets to take a couple thousand contracts down. But when it's trading sideways and 50 contracts are trading, it just watches. So these data points, like the jobs number, are liquidity events. If they're bearish for gold, that's a liquidity event. Thousands will be sold. If they're bullish for gold, there will still be selling as it rallies, meaning you have this increase in liquidity around data moments. And so that's why data moments are very important to big players. And I think big players are buying that. So in summary, if I'm a buyer and I've got a gazillion contracts to buy, and I need to buy them by like next Friday, let's say, give them another week. I pay attention to data points because that's when the liquidity comes in. Now, if the data is bearish, right, and the liquidity comes in and sells, I'm going to buy it. I'm going to buy it because I have an order that must be filled by next Friday. I'm a broker acting on behalf of a very large central bank type of client. Okay. If the data comes out and it's bullish for gold, well, I'm going to buy it, but there'll be sellers along the way, on the way up. The point, I think the takeaway from these data moments is how quickly and how much is bought on the lows. So manifesting, if you're a technical guy, it's like, let's say the data comes out really bearish today, right? You're looking for two things. You're looking for a V-shaped bottom, right, to be comfortable staying long or getting long, and you're looking for a non-confirmation indicator on those lows, and you're looking for how deep it goes. So this will be like a data event that's scooped up, right? A data event, not a data event. A data event, was this a data event? I don't think it was. That's scooped up. So you're looking for these V-shaped bottoms now. And if you don't get a V-shaped bottom, I'll explain it to you. If the market drops and goes sideways, then there is no buying interest with urgency. There may be buying interest, but they're like, I'll come back tomorrow. I'll come back Monday. But if there's buying interest with urgency, you get V-shaped bottoms. That's the moral of the story there. Okay, I'm Vince. So in summary, back to the home page. We're working on getting this right. In summary, bullion banks are raising price targets on gold and silver again in the first quarter of 2025, which is potentially very bullish for the rest of the year. I'm Vince. Have a great weekend.